Welcome back, everyone. Today is a big one. It is the CPI day. That is the Consumer Price Index. It is widely expected to come in low. Pretty much nobody thinks this sucker's going to come in hot. Economists don't think it's going to come in hot. The news don't think it's going to come in hot. Traders basically don't think it's going to come in hot. How do we know? Because basically everybody pre-traded it yesterday. I mean, stocks kind of skyrocketed today. Usually, this is just not a usual market. Usually, markets sell down before CPI because people are like, oh no, what if CPI comes in hot? It's not what happened. Look at this. Nvidia was up 6.5% yesterday. It's up another 1.3% in the pre-market. Tesla was up 5.2% yesterday off of PPI. And nobody cares usually about PPI, so it's crazy. So the pre-trading yesterday for CPI was pretty remarkable. But let's see what it is. I mean, who knows? Maybe somebody leaked it. Maybe somebody leaked the good old CPI, and they got the goods out for all the hedgy homies. Everybody else had to do the normal trade of, it'll probably sell off before the CPI report, and then it doesn't. Anyway, so this report comes out in about 2 minutes. It's probably, how important is it going to be? People are going to evaluate based on this report whether or not we're going to get a 50 basis point cut or a 25 basis point cut in September. I personally think it doesn't really make a difference what this report is. We're probably going for 25 basis points. I don't think we get something so blow off the top hot that we're not going to get a 25. And I don't think even if we got a 0 here, that we would end up getting some form of, 50 basis point cut or a Fed that wants to move sooner or something like that. I don't know. But we'll see. If I had to guess, I would go for a smidge warm, mostly because I'm kind of taking a little bit of a contrarian bet here that CPI is expected to be 0.2 month over month. Core is expected to be 0.2 month over month. And basically 63 out of 66 economists think it'll come in at 0.2 or lower. And pretty much nobody thinks it's going to be 0.3, except for 3 economists. So I'm like, all right, I'll take the over then. So anyway, we'll see what happens. But again, we're looking for 0.2, 0.2, and 3.0 and 3.2. So those numbers are coming out, frankly, within a couple seconds here. So good luck, everybody. And 0.2, it matches. Wow, let's see what the average is, though. So we got 0.2, 0.2. Then we got 2.9 on CPI year over year, 3.2 on the year over year core. So that's a match. So, it looks good. It basically met the estimates. The average estimate actually ended up moving to 0.2 and it hit. Let's see if I can get the actual detail here of exactly what it was. And we're going to go into the categories and we'll get super core and all those goodies as well. But the economists were right. And let's see, core CPI moved up to 318.953 divided by 318.872. That's about 2.5-ish on the core number there. So it seems like that'd be a little on the warmer side. But anyway, we'll go into the actual read here, and let's listen to Rick because he's always fun to listen to when these happen. Let's get into the report as well.
We're making some progress. 2.9% on year-over-year CPI. We're expecting 3%. In the rearview mirror was 3%. 3% was the best, the lowest CPI year-over-year rate going back to March of 2021. So this is indeed good progress, and that number in 21 was 2.6, so we stay comp to the same time period. And finally, if you look at the year-over-year core ex-food and energy, we made progress, but it's as expected. 3.2% in the rearview mirror was 3.3. 3.3 was the lowest year-over-year rate on the core since April of 21 when it was
All right, here we go. Let's take a look at the actual details here. Some of these details are going to matter a lot. What I usually like to do is just take a quick look at the top categories here, and then I want to jump into those detailed categories. So I'm going to look at July just quickly here on the top line. So I'm going to look at medical care services going negative on a month-over-month basis, which is good. Shelter's still sitting at 0.4, as well as transportation services. So those are still up there. We've got services, less energy services, 0.3. Medical care commodities down 0.2. Interesting, Mike Wilson was saying apparels had pricing power. Kind of doubted that, and that's down 0.4. I don't know how much those really align. And then new cars and used cars, nice drops here. 0.2 to the downside for new cars, down 2.3 for used. Nice drop right there. Energy didn't really carry over to hit that top line, so this is actually pretty good. And then what I'm going to do is I'm going to grab the detailed report. Sometimes we like to say the devil is in the details. And let's see what the devil has for us today. All right, let's find out here. Shelter did tick up. It was up 0.2 previously. Now it's at 0.4. So some folks are looking at that a little bit. Okay, the Facebook scammers are back. Gosh, I got to ban those guys again. All right, so let's take a look at this section here. So I always like to start at the bottom for these services because this is where we're going to get some of those core services. Financial services, 0.2, that's great. Apparel down 2.3, fantastic. Funeral expenses, 0.4, great. Miscellaneous personal services are sitting at 0.4, that's also good. Personal services, 0.3, that's fine. Let's see. What is this? Siri wants to finish setting up in my iPad. It's so dumb. It didn't even have a, let me do it later for you. It's like, I will be setting it up for you now. No, F off. Telephone services, -1, great. Let's see what else here. So, there we go. Postage and delivery, ouch, on 0.7. Post office must have raised some fees here, huh? Education, tuition, 0.3. Elementary and high school, tuition and fees, 0.6. Daycare, preschool, 0.5. The Wall Street Journal just had an article about how it's actually getting easier to hire daycare help. Actually, they were talking about how it's getting easier to basically hire everything. And apparently Spirit Airlines was starting to lay off, or I guess they call it furlough, pilots. I'm like, oh my gosh, I haven't seen pilots get laid off in forever. They've been in such a demand. It's crazy. Anyway, admissions, 0.4. What else do we have here? Pet services, 0.3. Pet services, not including veterinary services, those up a little bit. So these numbers are going to go into like our super core number. That'll get calculated over the next few minutes, and that's usually something markets like to pay attention to. Video and audio services, 0.6. A little warm. Public transportation, that's pretty good. -1.2. That one's been negative for a while there. Motor vehicle fees, could be better at 0.4. Then vehicle insurance. Yeah, these insurance ones, these ones are the sectors that kind of keep screwing up the super core. We were up 0.9 on motor vehicle insurance in June. Ticks up again. So now you had a couple bad things here. You had shelter tick up again, and you had motor vehicle insurance up again. So a couple bads here, not fantastic, but overall, I mean, the report definitely met expectations across the board. So it didn't come in hot. It's just really parsing the details, and you know how it is when people look at the details. It's like, oh well, I like this, but I don't like this, and it's all that kind of nonsense. It's all the nonsense, but it's all right. So goodbye, Facebook scammer, banned. And I've also turned off comments now. Ban. You losers. I don't know how. Like, I start streaming on Facebook, and, like, within minutes. Gosh, they're like literally 20 scammer Bitcoin. I mean, they must make money from these scams because they just come back every freaking day. It's kind of sad just how many scammers there are on the internet. Really, really, really sad. And then they go around and they like their stuff too. That's crazy. Wow, these guys are getting pretty sophisticated here. All right. Anyway, so where were we with our chart here? Okay, so let's see here. Rate traders have paired bets on a half-point cut in September. Okay. So looking at bonds, looks like yields ticked up a little bit, about 1%. I've got gold up about 12 basis points. Sorry, about 1 basis point on yields, not 8%. Anyway, we'll keep going here. So motor vehicle maintenance and repair work. Okay, that was negative, so that's good. But that's body work was negative, and motor vehicle maintenance and servicing went up 1% though. Okay, so a little warm there still in the stupid car section. Okay, transportation and services, 0.4. Yeah, all of these things go into super core, car, truck, rental, and some of them aren't great. This is good though. Health insurance, that's pretty good. How about hospital and related? Oh, that's good. Negative, I like that. Medical care services, good. Negative, great. Great, excellent. Water and sewer trash collection. Surprisingly, this one actually has a 1% weight in CPI. Tenant insurance, 0.1. That's pretty good. What else here? Owner's equivalent rent ticks up again. Yeah, we don't like to see that. We want to see that going down. It's supposed to be, we kept getting told that it's supposed to be going straight down, and it just doesn't. That's crazy. But it's on the trend down. It's coming down. Rent of primary residence, lodging away from home, housing at school. All these really ticked up here. Okay, personal care products ticked up a little, 0.2. Remember, you really want the numbers to be under 0.2. Once you're over 0.2, or once you're at 0.2 or more, you're really at 2.4% inflation. And, markets aren't really looking for that. So markets are looking for under that. Okay, let's see here. Alcoholic beverages away from home, 0.1. Beer, 0.3. But wine away from home, negative 0.3. Okay. If you want to save some money when you're going out drinking and you Uber, wine away from home. Alcoholic beverages at home, or it looks like wine at home is cheap too. Oh, wine's getting cheap. Okay. And whiskey at home. Got it. I don't know what's happening with beer, but beer's getting expensive. Smartphones are getting a little pricey here as well. 0.6 on smartphones. I think that's the first time I've actually seen smartphones go up. Oh, it's because they now have AI. Info, tech, commodities, 0.6. Computers, peripherals, 0.4. Computers, accessories, 0.9. These are some warmer sets here. College textbooks, education commodities, 0.4. A little warm there. Now we're really in goods, right? Recreational goods, 0. Newspapers, magazines, recreational reading up a bit. That's a pretty small weight, though. That doesn't so much matter. Get into some of the other goods section here. Medical care commodities a bit. Usually goods we don't care too much about. Let's see here. Yeah, you get a lot of negative here. Here are the new vehicles, the used vehicles, the trucks, all of those broadly negative. Jewelry's down. Women's footwear. Oh, okay, negative 1.5. Cool. Girls apparel down. Yeah, I don't see the pricing power there. Apparel down, negative 0.4. Tools, hardware, boring. Appliances. When do appliances go up 0.5%? Furniture and bedding down 1%. And that's pretty much the whole report there. Then we get into like the energy and food section, so we usually don't pay too much attention to that. Now what we're looking for now is the super core section. Market's kind of like up and down on the news, on the report. So it seems like flat basically. Our takeaway from these numbers is that once again, the cost of housing is propping up inflation. Economists had expected by now the big rental increases would have washed through the data, but these numbers suggest the shelter story is not at a conclusion yet. Yeah, that's unfortunate. it's not great because you really want to convince the Fed to move here, and you're not getting it yet. Let's see here. Can I get someone on Supercore yet? Let's find out. Traders, trimming bets. No. Let me see what the odds of a 50 are now. I'll go take a peek. All right. Oh, it is August 14th. Oh, I screwed up the date. Oh, that's unfortunate. Oh, well. So let's see here. If I go to rate cut bets, yeah, I'm still seeing about 1.47 cuts priced in for September. I do think that'll probably end up getting down to the basically 1.0 level, mostly because I think they will go for a single cut rather than a 50 cut, and so they'll have to talk it down. But yeah, somebody's saying, why is TLT down? Well, because when yields go up, TLT usually goes down. But yields are roughly flat right now, so we'll see. And it depends if you're also looking at pre-market. Pre-market's highly illiquid, so you have to be careful looking at pre-market on more illiquid securities. They fluctuate like crazy. Like sometimes you could have like, I'll see it sometimes with Ubiquity, for example. You know, in pre-market, yeah, it'll be up. Well, it's actually not even showing pre-market because there's so little trading right now. Sometimes it'll show it's up like 3% or 2.5% or whatever, and then it's up like 0.5% on the day, and like instantly too, right after it opens. And then the same thing on, you know, to the downside. Okay, so interesting. So disappointing shelter data, temper soft core, super core came in at 0.21 after 2 months of declines. So less disinflation showing up in there. All right, there's the super core number, 0.21. Yeah, I think we had some negatives there for a while. Airline fares fell 1.6%. That's not a surprise. We've seen quite a few airlines complaining about a lack of ability to price and to, you know, hit revenue targets. So not a surprise. And then we have right here, Nicky T. Core CPI estimate rose 0.17 in July, in line with estimates. Here you can see sort of the chart breakdown here. Not bad. You've got 12-month change, 6-month change, 3-month change, and you can see the 3-month really ticking down there. So kind of a good thing to see for your long portfolio. Long portfolio will be happy about inflation going away. And then you can finally, hopefully, convince the Fed to get to cutting. Then let's see here. Okay. Let's see here. Pickup in housing costs. Not a good read. Questions the more recent string of lower readings. Yeah, this is a lot of economists complaining about that housing shelter number. I don't really see that as being that big of a deal. These numbers probably won't change the Fed's cut for September. I agree. Let's see. What else saw the Sudi saying? Pretty much every economist was at the 0.2, with the exception of some above, and I think like one was below. So it seems like they all hit at 0.2. I mean, they run their own analyses, and then they've gotten a little better recently. They used to be pretty bad during COVID, especially, and afterwards. Cleveland Fed nowcast on Monday updated the nowcast for 3% year over year. Inflation dipped a little bit below that model today. Yes, it did. Okay. I'm gonna find one of those component graphs where they really break down the components, but we kind of just went through all of the components. Oh, there we go. Speak of the devil. Core consumer prices. Let's see here. Core CPI saw a decent jump. Okay, so Zero Hedge rushed to throw this together. They always do a decent job on this. There it is. So this is the jump that people are complaining about right here. Is you've got this nice downtrend where you ended up going negative on the super core, and now that is slightly positive again. And that's the super core month over month coming in here at 0.205. 0.205. There we go. Okay. Not too cold in here. Okay. So this again driven by some of the other sectors we went through, water, trash. You have medical care services that were actually negative in this, but transportation services, other personal services, recreation, some of these other items came in a little warmer. And then, of course, again, housing a little bit as well. So let's see here. Kevin, any read on mortgage applications? Seems like any decrease in mortgage rates is unlocking demand. Wouldn't that delay a recession if construction jobs remain strong and housing remains bid? I don't actually think that in many areas where there has been underbuilding, there are signs of housing stress, like California specifically. But there are other areas as well that have underbuilt. So I don't actually see housing here as a recessionary impetus. Maybe some declines in areas like Texas or Florida or otherwise, but otherwise no. Let's see here. Ryan thinks I'm irrational and is misstating what's been done because what you're saying is not true. Mason says, are you still on the 2.5 bear bull scale? Yeah, so really nothing's much changed. I still think we're really trending towards a recession. That doesn't mean that every single week is going to be bearish, but unfortunately, I think the Fed is just going to take little tidbits and utilize those tidbits to delay their actions. I actually don't think inflation is a problem at all, but I think the Fed's really starting to, like the lagged effects of high rates are kind of going to have hit very slowly and then they'll hit all at once. So, yeah, it's a little unfortunate. I'm not excited about that. So I still think, a recession takes time to develop. And so for me, I don't think the risk reward is very good. I'm not like a 1 on the bear bull scale, right? But I don't think buying stocks right now is a great thing on the bear bull scale before the election. I think volatility would be pretty strong going into that first rate cut, and then of course election volatility. So I don't think the risk reward is really there. So personally, I'm looking more for what opportunities will there be before the election, assuming no recession. And then of course, if we have more recessionary indicators by then you could always sort of reevaluate, is my thought. But a lot of this volatility we've had recently here was driven by the Japan carry trade, and it really doesn't change much of my view. So my view is already that inflation is basically cured. I think the Fed's well behind the curve, and so I am worried about those jobs reports over time. So yeah. Let's see here. Somebody says, I see a lot of price drops in the greater New York City area. Yeah, I agree with that. Yeah, I agree. So supply and demand, all sectors are different because of this, more competition. Yeah, a lot more competition, you're right, that you're getting, especially in products. But that's the point, that's what happens in a pandemic. You see, in a pandemic, you expand your supply chain substantially. Because there's such supply shortages, so everybody's manufacturing more. In a war, you typically destroy supply chain infrastructure, due to invasion or whatever, right? So you have some differences there. It's kind of interesting. I've got an interesting piece in the Wall Street Journal I'll pull up. Actually, it's in paper, so I'm gonna go grab it really quick. I'll grab my coffee as well. So give me 1 second.
Thinking about the speed, the time to that destination, even as they contemplate, and I suspect they are contemplating when the right time to cut is.
Esther, would you think that the Fed believes it can get to where it's going even by cutting rates? In other words, how much belief do you have in how restrictive the Fed would be even if it took 100 basis points off of the funds rate here?
Well, this is always the big question, Steve, isn't it?
That's the ones I ask.
Because we don't know exactly where the equilibrium is in the economy. We estimate where we think that end state is, but I think, as you've heard the Fed chairman say, when he talks about looking at the totality of the data, when he talks about trying to figure out where the balance of risk is, it is really trying to sense from the economy, both the backward-looking data for the trends, but also in the anecdotal information they're getting, just how restrictive they are and how much they're going to need to move. And so I think that's going to be the important conversation in September. Maybe less about starting the cuts and more about what is the destination.
Esther, did you miss planning Jackson Hole this year?
Did I what?
Did you miss planning Jackson Hole this year?
I did not miss that. It's a terrific conference, and I look forward to seeing what comes out of that meeting.
Esther, thank you. Thanks for joining us, Esther George.
There you go. Pete says, I'm in San Diego. I don't see no drop in the housing market. Well, yeah, that's what I'm talking about. That's what I'm saying. California is extremely insulated. San Diego especially. San Diego is a very, very strong market. San Jose area is a very strong market. East Bay has some strength to it. Central California, other parts of SoCal, very, very strong markets. But this is what I've said for years, is that California underbuilt during COVID, and it should hold up better than other markets. And sure enough, as we go study markets in Idaho or Texas or Florida, the markets are substantially weaker. But that's not a surprise. I mean, you had crazy overbuilding during COVID, because there was this idea that, there's going to be this steady stream of people who come, and then they don't continue to come. You get sort of a wave, but you don't get the continuation. So the growth rate flattens. Okay, so overall, I personally don't actually think the CPI report's that bad. I think you've got another catalyst coming up tomorrow, which is retail sales, unemployment claims, and it'll be interesting to see how much markets really care about that tomorrow, but we'll look at it. I personally think those are a little bit more important. I wanted to get that jobs thing, but I ended up just walking back with 2 coffees here, so let me just see if I could just pull it up. Let's see here. Oh, there we go. So, suddenly, hourly workers aren't so hard to find. Too many people asking for jobs at the Boston Logan International Airport for the janitorial service, they say. They talk about, for months, hiring has been a bright spot for low-wage workers. Even as companies from tech to banking pulled back on corporate recruitings. And previously, executives bemoaned they couldn't find enough retail clerks, warehouse workers, cooks, housekeepers, and others. The trend is shifting. Now, it could be a normalization, right? Somebody donated, I think, like $2 or whatever here, just to say, like, what hurts the recessionary thesis? Well, what hurts the recessionary thesis is that it's just a normalization, right? That the inverted yield curve is wrong, that, the pain of the lag of rate hikes isn't that bad, and that companies don't end up laying off. It's one of the reasons I say, we're a stock market crash away from a recession. Fortunately, last week, the Bank of Japan basically bailed out markets, and then you had a good unemployment claims number, which is nonsense anyway, because unemployment claims don't really matter until you're already deep in a recession, but whatever. Spirit Airlines has stopped recruiting flight attendants, offering some of them voluntary unpaid leave of absences. Airline will furlough 240 pilots. I was shocked to see this. John Deere shed about 15% of its hourly workforce. Daycare giants are finding it easier to find people. D.R. Horton, a home builder, is finding it easier to find people. General Dynamics is having an easier time finding people. Pretty much everybody's finding it easier to find workers. White-collar hiring remains distressed. Information sector lost jobs. Restaurant relief. BJ's is finding less need to attend job fairs to find workers. But like a normal jobs market, it is a little harder to find a job, right? So maybe that's why a lot of people think it's just a normalization. Big silent layoff. I thought this was very interesting. The first signs of a slowdown started over a year ago with basically people posting less jobs, and then as people leave, they just don't hire them back. Still shortages in trucking, though. I thought it was a pretty good article, actually. It gave some really good insights over here. So Victor says, what does that mean for my plan to become a pilot and make 6 figures? Well, it means Spirit's probably not the place to go. Cameron Vaughn, I think? Vaughan? Anyway, says, private sector has been in a recession. Mission, 99 cents, thanks. Amazon rocketing, says someone. Yeah, it's been at that 160 level, and yet those retail sales coming tomorrow. Oh, look at that. Now it's at 171. Nice. Amazon's one of my faves. And then, NVIDIA's really done a nice pump back up. Come on, pump that up. Tesla back at that 208-ish level. It's not really a particular level that I'm watching there. And then, of course, you haven't really had a red day in over a week here for the market. So you still got retail sales tomorrow, and then you've got Friday's sentiment. But this is there we go. This is a pretty big CPI report to get out of the way. And BTC looks like it just rejected at 61.7. Was that when the report came out? Yeah, it actually rejected right when CPI came out and started trending down. Very interesting. Do you think the Fed dot plot will have 3 rate cuts now for the year? Oh, I don't think so. That's pretty ambitious that the Fed might forecast that. They could, but that's what markets seem to think. Markets are putting September at 146, November at 27, and December actually at 4. I guess it depends, what it's like as we get closer. They always seem to sort of make that decision right the day before the meeting. I feel like they just kind of look at like, all right, what do markets expect? Let's not rock the boat. All right. Yeah, 3-month annualized CPI came in pretty low, 1.6%. Smartphones are down 8.2% on the year, but ticked up a bit here in the last month. Okay. Let's see what else. Again, overall, pretty benign. I know people complain about that housing sector. I don't honestly think that owner's equivalent rent is that big of a deal, and I think it's a stupid measure. But, you can now look at rate cut bets on Polymarket. Well, that's pretty cool. 68% chance of a 25 BP cut and 25% chance of a 50 Polymarket. How interesting. Because the bond market's more 50-50 on that. Okay. What else? So, yeah, Q's up about 22 basis points here. And Dow's flat, S&P's up about 11. Bonds are pretty flat, honestly, too. Kind of a nothing burger of a report. Let's see. Cameron, I'm a 20-year-old investor. Would you suggest adding hedges and buying the dips when they present themselves? It depends for everybody, but honestly, I think that the younger somebody is, the less important it is to have hedges. I think for most people, it's like you just buy long, set it and forget it. For most, and then diversify a bit. At least as Buffett likes to say, the 20 punch card rule. It always seems to be sort of some broad suggestiveness that resonates and that seems to be well accepted. So Energy State says, "Come on, pump it up." Exactly. Fed won't cut on a nothing burger. Well, that's the thing is I don't think they're going to go 50. I do think they've pretty well forecast a September cut. Yeah. All right. So let's see here. Hey, Tesla's up about 0.5% there. Ubiquity doesn't show pre-market. Amazon is moving on this. And then even Chipotle is up about 159 after that dump it had yesterday, huh? All right. Hedging for someone with a big portfolio, not someone under $2 million. That's quite potentially a good suggestion there. Thought rates take the elevator down. No, rates take the elevator down in a recession, right? There are two forms of rate cuts you can get. You can get a recessionary rate cut, and then you can get a soft landing rate cut. You think the Middle East will help a rate cut? I don't know if anything's going to happen with the Middle East. We'll see. I mean, we keep getting warnings about the Middle East, and it seems like the negotiations set for tomorrow could be a big deal, but not seeing that right now. So, what else? Yeah, it seems like Iran wanted to head over to the negotiation as well. Okay. Although Israel's like, if Iran's going, we're not going. It's crazy. Okay, so what else here? Nvidia's moving up since the report. Q's 23 bips, 24 bips. All right, what else we got? All right, let's see if anybody else has anything fun. I want to see if Nick T's got anything. Nick T. All right. Nope. Just the chart he showed us earlier. Okay, very well. So, let's see here. Whoa, that's some spam there, huh? Okay. You're calling for that? I don't tell anybody what to do. I say I think I've been very clear. I say I personally think the risk reward in stocks right now is not that great, and that I have a long position that's way larger than my hedge position. Duh, that's the point of it. And it's got plenty of exposure to stocks, and even I think still some to Nvidia. It's it's something that I've been saying, hey, like for me, I'm a big fan of hedging this week. This week's going to be crazy, and that was built on the Iranian fears, the concern over the fact that we were getting a massive data set, right? PPI, CPI, unemployment claims, which I think claims are a nonsense, nothing burger anyway. Tomorrow we get Walmart, Baba, retail sales is the bigger one. Michigan survey isn't that big of a deal on Friday. So tomorrow is still going to be an interesting number, and it'll be a little bit of a gauge of the consumer too. Think like if any of them I was leaning towards not great, probably that retail sales report tomorrow, mostly because in earnings calls, we've been hearing a lot about how it feels like consumers hit a wall in July. I don't really understand that so well, but I thought that was very interesting. And so those retail sales numbers come out tomorrow, and you're looking at, you're expecting 0.4 month over month. X auto and gas just 0.2, which is pretty benign already in expectations, but I think that'll come missed to the downside a little bit. So, yeah. 777 Media says missing out. See, I don't really care about that because I'd rather protect to the downside going into the election than having the fear of missing out. I think that's dangerous and leads to malinvestment and speculation. That's my opinion. Like, I'm allowed to have an opinion. But people like to come in here and shit on me, when the market's going up. And I'm bearish because, I don't know, I think people are just keyboard bullies and they have this feeling of like, oh, I just want to shit on people because I just woke up and I'm tired and I hate my job. It's like, okay, well, it sucks for you. So, I wish you a better life, I guess. So, month-on-month pickup in Supercore services probably doesn't matter a whole lot to the Fed now. I agree with that. This was a key gauge for Powell and his colleagues for a long while, but remember, this measure is heavily affected by labor costs, which we know are coming down now. Yeah, there doesn't seem to be any kind of wage price spiral at all. That kind of that's been gone for, I feel like, over a year now already, and we've kind of been seeing that in data. No, nobody else has really given us any other data there on CPI. So let's see here. Walmart won't tell us much since they're since they also do go during the recession. I'm not sure exactly what that means. Owning the float with the Mario hat. That looks kind of cool. I think that's Mario hat. God bless, much love. AMC is trash. Stay away. Wow, donated $2 to say that. You're gonna upset some people there. So Wyatt says, love you no matter what. Oh, that's awesome. Let's see here. I think the market is rigged for the election, says Cody. Ooh. So Josh says, I call these kinds of people garbage men. They walk around all day waiting for someone to dump their trash on. Miserable folks. Ooh. So let's see here. $4.99. What's this? Hope you and the kids are well. Yeah, great. Thank you, Trey. Let's see here. Thoughts on Palantir pulling a Tesla in AI is in the only real player in the market. I actually agree with that. I think that Palantir is a fantastic company, great AI company. I think, and I've been saying it for a while. I think they're one of the strongest AI plays. In a recession, if you actually have a recession, all of these plays get crushed. But as a company, it's a fantastic company. Very, very, very excited about Palantir and the tech they have, which I do also respect Snowflake, though. They haven't caught the bid that Palantir has, but Snowflake also has some pretty good tech. I don't think it's Palantir level, but I'm a big fan of Palantir. Do you believe the top for equities is in? Well, I don't think we're going to pass the top of July 10th and 11th before the election. So, it's one of the reasons I've sort of been saying, hey, I think there could be this sort of like 15% broader upside from some of the bottoms that we've seen over the last week, but I think the downside is unfortunately greater. But, hey, we shall see. We shall see. Nobody knows. Nobody's got a crystal ball. But, the Nasdaq's up about 5% from the 438. I could see it moving another 10%, roughly basically to where it was. But, that's just my take. I don't see why we'd get crazy all-time new highs here. But we'd see. We shall see. That is just my take. My take is there. I am still 2.5 on bear bull scale. 2.5. What are the Qs? Never heard of them. So it's the NASDAQ 100, and we call them the Qs because one of the popular indices that people use is QQQ. If you actually go to invest, though, you should use QQQM because it's the same thing. It's just cheaper. So, yeah. Let's see here. Let's see here. Brandon says there was only one person to call for this to happen in the lows of 22. Really? Gee, I wonder, because I'm pretty sure I launched a fund calling for the Nike swoosh at the low of 22, but whatever. Only one! Okay. Let's see here. When you don't have a business and employees and just family, it's easier to jump in by the dip, but the reserves you need to grow as you grow. It's an interesting way to put it. Yeah, this is why I always say investing is so personal. I have a lot of businesses, and I always like to be a backstop because I put my reputation on my businesses, and obviously I have a lot of expenses associated with startups as well. So let's see here. Do you think equities? Okay, we answered that. Hate is gonna hate though. Yeah, no, that's true. Do you see how much cash Warren Buffett has? Over 200 billion. I know, it's crazy. I think he's one of the largest owners of treasuries right now. It's pretty wild. Pretty wild. Let's see here. What else? Great inspiration for younger generations. People should be listening to him over entertain. Oh, thanks for that. Just okay. Why would anyone buy QQQM when they could buy XLG? I mean, these are different options, right? That one's definitely more weighted in favor of NVIDIA. So you kind of just have to look at sort of the individual components, eh? All right. Very cool. So what else? Let's see what's moving here. So we've got the Qs are up. We got about 18 minutes to go. Qs are up about 21 bips. IWM small caps are up about 41. Amazon 80. Tesla about 50. 2.13 there on NVIDIA. Triple Q is obviously down. And then you've got Palantir 1.02. You've got Chipotle down 1.63. Starbucks, Chipotle's up 1.63. Palantir's up 1. You've got Apple up 0.15. Microsoft 0.1. What else here? Hood 136. What are the big movers here? BTC's really been trending down since the report. Curious to see how the market will open. Pre-market says the answer is up. You've got ARM moving. How's ARM been? ARM's been coming off that low under $100 there for a minute. Nice little trend up. What else here? We've got, let's go zoom out and see what some of the biggest movers are on the track list. ARM, Micron, Supermicro, Upstart, NVIDIA, 2% on NVIDIA, nice. Go to the flip side here, Soho House down, Goog down about 1.18, EXPI down a little bit, Reddit down a bit, Trade Desk, and these are some nominal moves right here. All right, cool. Let's see what else we have. Okay. So, supercore inflation's bounce back is a headwind for bonds. I don't know. Are bonds actually moving on this? I thought they were. Last we checked, bonds were flat. So, let's take a peek. Let's see here. Bonds. Yeah, the 10-year is pretty flat right now. What's the 2-year? 30 years down, and the 2 years up 3 basis points, 3.5. It's more inversion, so it somewhat just suggests more time to go. If I go to the 2-10-year, I'm looking at, yeah, we're at 12.25 on inversion right now. How interesting. All right, let's listen in. Over here.
To see CPI not really moving the needle much in either direction. Futures pretty steady. Squawk on the streets back in a minute.
Oh, okay. All right, I was just going to listen in over here. Let's try over here.
But something to keep a close eye on is if it gaps up above its 200-day moving average. If you look at the A&R function right now, has 9 holds, 9 buys, and actually 1 sell rating on this. But those are some of the big movers ahead of the opening bell, guys.
Jess, we thank you so much. I know we'll talk to you later in the show. Looking forward to it. And coming up, we're going to talk about a major deal. Candy giant Mars is forking over $36 billion to buy Eggo and Pringles maker Kellanova. We're going to discuss the consolidation we're seeing in the food industry. Up next, Kellanova shares on the rise. This is Bloomberg.
Says, what do you think about the M2 money supply? Bad lags coming on the chart. I see they've never been red candles. Yeah, I mean, we can take a look at it here. M2 money supply. Fred. Let's see what you're trying to see. So usually what I do is I look at change from a year ago. And you're referring to 59. I don't even have 59 on the chart, really. I have 60 as the furthest this goes back. But the money supply going positive again is essentially, I mean, the money supply is normally positive, but this is also the change year over year. So we're generally expanding the money supply. I don't necessarily think that's inflationary. I mean, we had 40 years of disinflation from 1984 to actually probably more like 1980 to 2020. And so during this entire period of time here, inflation was coming down. And so I don't really think that matters. I think it's just the growth rate going positive is sort of a normalization. So I don't see a big issue here. In fact, if I do this, I'm going to show 1980 to the pandemic. And what we're going to do is we'll add consumer prices. Let's see here, all items. And then we're going to go with, oh, it reset my chart. How rude. Okay, let's get right before the pandemic. And then let's go to 1980. It's about right here. So this is where you could see CPI plummet from the 80s. And basically the rate just essentially trends down to below trend over here while the money supply has gone through its oscillations. And you can see it doesn't even line up. You know, over here it's CPI is low, money supply up. Here, money supply up, CPI up, money supply up, CPI up. Then you go over here, money supply up, CPI down, money supply up, CPI down. So I honestly, I don't think that the money supply is giving you really any indicator other than a normalization. It's a good question, though.
The tech giant's remote work policy has contributed to its struggles in AI.
Cole says head and shoulders still.
During a discussion at Stanford, the University School of Engineering released this video of his remarks yesterday.
Google decided that work-life balance and going home early and working from home was more important than winning. And the reason startups work is because the people work like hell. And I'm sorry to be so blunt, but the fact of the matter is if you all leave the university and go found a company, you're not going to let people work from home and only come in one day a week if you want to compete against the other startups.
Some argue, Jim, this took a little shine off of the AI event yesterday.
Yeah, look, I think he's right. What can I say? I mean, there are two different kinds of work. There's the work where you decided, all right, listen, I'm going to roll the dice, be on my own, do this kind of thing. And then there's where you come in and you wear a suit or you wear like shorts, I don't know, and they say, look, do work at home, we don't care. And I think that the collaboration at this level is everything you have. If you're on your own, you're not going to collaborate. I don't know how it works. How does it work?
We've been saying this for years at this point. Doesn't matter. I mean, Fridays certainly are a day that most people do not come to the office, I think it's fair to say, in this country. That said, a lot of companies are back to at least expecting 4 days a week, which probably gets it done for the most part in terms of accomplishing the things you're talking about. But Google is not that place. No. As much as they may have wanted many of their employees to come back, they've been at war, in a sense, with their employee base in terms of working remotely and not. And, you know, we have all questioned how you can have a sense of urgency in an organization in terms of attacking something such as a huge sea change to your business as AI by all just sort of being, not together. By the way, we should point out, those comments were from some time ago. Stanford just released the video, and that's why it's getting attention.
Okay,
but as you might imagine, Stanford's not in session right now, I don't believe. So that was from a number of months ago, is our understanding. But it is now being made public.
I'd like to know whether the athletes from Stanford who medaled, did they all get together? Because they don't seem like they didn't work Fridays.
Ledecky would be one.
I think Ledecky probably worked Friday with a glass of milk on her head.
Right. As for the DOJ reports, Jim, I know you've been all over the notion of a breakup and what that would do to overall value.
Well, would that be terrific? I mean, if Jonathan Cantor wants to, I mean, maybe he's switched to the Bulls. He's been on the Bear side. Because, first of all, you have Waymo in there. No one even knows what Waymo does. You have the other bets. Maybe they'd be worth something. The search is such a good business. On the last conference call, they completely blew what YouTube was worth. Maybe if someone was really just a great spokesman for YouTube, we would know what they were doing. I think that their PC, Android is great. This thing is so terrific that it should be broken up into.
All right. Kevin, what do you type to find out that inverted yield curve? I mean, the inverted yield curve, you could just do it manually, right? You could go to cnbc.com. At the top right, type in 10-year treasury, memorize that number. We'll do it together right now really quick. So I'll show you right here. There, 10-year treasury pops up for me. So 386, 2-year treasury is 3.98. Okay, so that's 12 basis points of a difference, and then I got a decimal there of 1, so 12.1 is the inversion right now. You know, and I mean, this fluctuates by the minute, so call it 12 basis points just to keep it a little clear. So, okay, so someone here says, possible to do deal analysis in course member live. Yeah, sure, we can do that. So we'll do real estate deal analysis, and then we'll get into some companies. Someone says, home office improved my output by 30% simply due to canceling all the noise, office noise. Yeah, getting distracted in the office is very, very common. That's why one of the things, like when we hire a new employee, the first thing we do is we give everyone a noise canceling headphone. Yeah, so one of the first things we do. Yeah, let's see here. Pump boys won't understand risk management. To be honest, nobody likes risk management. Its sole purpose is to ensure that not everyone is on the same side of the boat when a stormy time hits. Yeah, that's fair. Let's see. Confident in your contrarian view? No, I'm not like overly confident in my contrarian view. My view is just that I'm more confident in the contrarian view than not of you know, a slow brewing recession coming, and that to me makes risks just not worth taking right now. So like we're doing the same thing with like House Hack or other companies. It's like we're tighter on deals. You know, we write more competitive, or less competitive offers to get better deals. And I mean, we just bought like 5 properties, so it's like we're still buying stuff, right? But just got one like 2 days ago. And this weekend I was in San Diego with Lauren, and you know, looked at houses with Lauren. She's like, "This one's perfect," and I'm like, "Yeah, I agree with you." And we bought it. But anyway, then we've got. But yeah, I mean, in terms of just like, you know, even other startups, like the money that you want to throw into like long projects right now versus just like, you know, get through the next couple years. I think there's a prioritization there that should be done, and that's reasonable, but we'll see. We shall see. Brent Newcomer says, Somrule and 10-2 doesn't lie. Yeah. Soft landing narrative will help drive the melt up. Yeah, well, maybe. Jason thinks last Monday was the bottom of the correction. Yeah, that sort of like 100% confidence makes me nervous. So, let's see here. Yeah, I'm focused on long term, short term. Let's see. Let's see. Okay. Someone says Nvidia just flew up. Oh yeah, look at that. It's up at like 2.8 now. Yeah, you've got earnings coming up as well for Nvidia. Oh, look at that. Look at that pump on Nvidia. Can't keep that one down, huh? Look at this. It's trying to go back to, what, 125? Heck, it might end up getting there today. Yeah, look at that. What a pump, huh? That's crazy. Then you've got Amazon's trying to climb out of the hole. Oh, Amazon got a little bid there, too. Yeah, it looks like everything kind of... Amazon did... Let's get off the average there for a moment. Amazon, Nvidia, they got pushed. And then Starbucks down, Chipotle up. I mean, that's probably just normalization after that. You had a little bid there on Microsoft, too. Apps, Robinhood. Robin the Hood. Yeah, BTC's giving you a little bit of bearishness, but, you know, BTC hasn't been great, in my opinion. Oh, how interesting. Blinken has now fully canceled his trip. Okay. There we go. Write that down. So it was initially thought that it was just going to delay it. Blinken has now fully canceled his trip to Israel, citing threats in the region. Yeah. Oh, yeah, I mean, that's a huge catalyst as well as the Gaza ceasefire negotiation. Ceasefire negotiation. So we'll see what that looks like tomorrow. Let's see here. What else? What else? Qs. They're sort of getting a reversal of some of that. No, it looks like it's Amazon's still holding on. Yeah, a reversal of that candle there on Nvidia. And who knows? Could just be market making and block sales. Who knows? Apple trending down. Starbucks trending down. Microsoft, couple reds here. We're about 2 minutes away here. So we'll see what happens here. More Iran talk. Yeah, I mean, I think I kind of agree with what Elon said, that people somewhat underestimate the risk of nuclear war. Just scary. I mean, I don't want that by any means. I think that's terrible. I don't think any human wants war. Okay. All right. So, yeah, let's go get our Who Wants to Be a Millionaire up. And let's get ready for the opening. It's going to be interesting. Okay. Okay. So, we're going to do, let's see here. There we go. Okay. So, 2 minutes to go. Let's test our little buttons over here. Let's see. How's this doing?
Buy the dip.
Love it. All right. Hopefully that wasn't too loud. Shouldn't be. That's pretty good. All right. There we go. All right. All the excited folks. Okay. Good luck, everyone. Good luck, my friends. I wish I could be as bullish as everyone else. I feel left out at the party, but I can't help myself. Yep. Get some coffee. Good old coffee. Get your coffee. All right, here we go.
It is Realty Income celebrating its 30th listing anniversary on the NASDAQ. It is Microsoft and their summer mentorship program.
I've been recommending Realty Income for a long time, Carl, because a lot of our viewers watch the show and they want monthly income. And Realty Income is a monthly dividend. It's really kind of great.
All right. That looks like about a 50-50 split there. We've got the Qs looking to rise. Look at that. Qs going green. 25, 27 basis points. You got the Russell 2000 going up. It's only up about 29-ish basis points right now. Still getting those green candles there on the Qs. IWM's trying to figure out a direction there. Tesla's flat, trying to figure out a direction. Not exactly sure which way to go there. Nvidia's got surprisingly a little bit of a red candle, but you know, hey, it's well up. It's up 1.79%, so that's pretty good. Q's still rising, 35 basis points. Apple's trying to stabilize, can't figure out which way to go. How's ARM doing? I know ARM was supposed to be a mover today. ARM! It's up about 4%. Yeah, it's still kind of moving there. ARM, now you got Upstart, slowing down a little bit. A little bit of a slowdown on Upstart. Palantir, slowing down a little bit. Slowing down a little bit on Nvidia. Oh, there comes the green candle on Nvidia. And let's see. Starbucks trying to pop up again. I mean, remember yesterday it was up like 22%. It was crazy on the CEO poach. That CEO's got to feel like God right now, honestly. Good for him. Look at that. Apple down. Maybe he's watching. Can I have an interview? Anyway, we'll fly to you. 60 basis points to the downside on Apple, though it's trying to flip to a green candle now. TLT's up 30 basis points. Hood's up a little. Apps. What else we got here? Meta Platforms is trying to hold on to that 40 bips. Disney's up a little bit. Home Depot. Look at Home Depot. Nice little up. Bounce on Bitcoin. Look at that, line to line. From CPI line all the way down to the 67 line. So 60,700. And what's Brinker? I'm saying Brinker is down 14%. Brinker. Q's trying to figure out still their direction. Brinker shares drop 14% for biggest decline since May 23 after results. EPS missed. Comps actually beat for Q4, but their forecast revenue beat as well. Looks like their forecast EPS was a little soft. I have an investment property in Chicago built with split face block, 1 unit in 3 unit condo. Would you spend $70K on tuck pointing and painting for a 10 to 15 years year fix, or $140 for a permanent fix? Oh my gosh. Well, I think I would get multiple more qualified opinions. That's what I do in these situations. As you know, I'll get. Usually, what we'll do is we'll get. And we tell them, it's really important that when you get your quotes, you tell them, hey, like, this is a rental. We don't need this to last forever. We need it to be safe. And you know, we could always do forever upgrades in the future. But we need it to be safe, and we don't want any problems for the next few years, and we want happy tenants. But, you know, we're on a budget. And then I go to the people who do that kind of work, and, you know, we'll get 3 or 4 quotes, and then we'll see. Of course, over time, you could build relationships with people, and then you know who to send, and then you don't have to get quotes all the time. But, and you sort of start knowing what things should cost. But something like that, I don't know, man. Sounds like you may have only got one bid. I mean, I don't know. Maybe you're giving me the best, but it sounds crazy to me. If I had to pick between these two, I would absolutely be partial for the lower amount, 14-year fix or permanent. Like, yeah, no, I'm not spending twice. So anyway, that's but I don't know. I you know, you'd have to see your project too. So, but anyway, hopefully that's helpful. Kevin, you seem way less stressed sitting heavy cash. Oh God, dude, this like I care most about I think people don't realize I care most about the success of the startups, right? Like I really don't give a flying rat's hootie if the stock market goes up. I don't care if it goes down either. It doesn't matter. What matters to me is getting through what we're getting through with our businesses, and making sure we've got a great core team that's able to operate efficiently and not take risks. You know, I'm not like. Yeah, we have a lot of investor money in Househack, for example. I'm wearing the shirt, Househack. You know, if I screw up Househack, my reputation's screwed. You know, I can't take risks. So anyway, Qs are holding on to about 12 basis points here. ARM is, you know, gave up its sort of running there. It doesn't seem like you're kind of getting running today. A little weird. You know, Q is only up about 9 basis points here. Tesla's down like 1.3% here. Just a little bit of a give back from yesterday. Nvidia gave up some of its run here. You've got Starbucks down a bit. Apple's recovering, so there's some hope here. And you're at about 31 on Palantir, so you got to give credit where credit's due. That's pretty good. Let's take a look at Meta for a moment. Let's see how they're doing today. Yeah, Meta's trying to move up as well. 532. So Meta's moving up. Apple's moving up. Nvidia's moving up. Let's see if they can keep that trend going. What else is going on? BTC is breaking the line. A little bearish there on the BitTiz sizzles. And then you've got Constellation Brands going nowhere. Coins under 200. McDonald's. I don't think they've really gone anywhere here recently, have they? Let me see here. No. Kind of stable. Sometimes those pop up on recessionary fears, but in a recession they go down as well. Well, historically at least. It's no guarantee. Dell's at $200. Down like 50% from where it was. Probably rightfully so. I mean, some of the AI capex is a little overblown. Enphase doesn't want to hold on today. AMD, look at that bounce right there at the 140.94 line. And it came from the 130 or 143.96 line within a penny. And you know me, I rarely change these lines, or generally I only add the lines. I don't change them. So when I look at these, I'm like, oh my gosh, that's crazy. You know, like I always say in trading, trust the lines. That doesn't mean they're always right. Seems to be that they are more often right than wrong. So we'll see though. Tesla's trying to rebound now. Although Nvidia tried that for a couple candles and already kind of flipped back. Apple keeps going. So what else we have here? Let's see here. How's the SPY doing? 54.40. And then what about if I just go NDX? This is so you can see the actual headline numbers rather than just like the SPY or QQQ. You could type in NDX, you get 19,000 on NAS. You could type in SPX and you get the S&P 500. DJX is the Dow Jones. It's the 1/100th index. Oh, interesting. Maybe it's no, it's not DJI, is it? Oh, it is DJI. Oh, see, I confused that. I rarely look at the Dow Jones. But what's remarkable about the Dow Jones, let's zoom out here, is you've also had that recent sort of correction there, just like the Nas did. But anyway, Nas still holding on. So up about 10 basis points right now. Getting some red candles there. ARM's trying to go back. Getting the run on ARM. Meta. Upstart, not so great. Amazon, Tesla still dragging along, down 1%. Apple's moving up now. Microsoft's moving up now. Okay, looks like you sort of got a broad move up over here. Let's listen in the Jimbo.
Not be happy about this where he's still.
I mean,
here.
Jill Saltel. I mean, look, she works at JCPenney and former president of Joann's Stores. Do you think that's the connection?
We'll see whether they reach
Southwest?
some sort of a settlement or whether this thing goes to a full proxy fight. But again, to the point, as for this is the most important activist, Elliot.
Yeah.
And they don't engage in proxy fights too often, in part because a lot of times they get kind of what they want. Now, in the case of Starbucks, of course, as I reported yesterday, it's unclear that they had nothing to do with who they reached out to or anything else. Their presence there, their significant shareholder ownership certainly may have lit a fire under the board in some way that might not otherwise have taken place. Stock's down a little bit today, Carl, but that move yesterday was truly extraordinary, both in Starbucks' move up and in Chipotle's move down, all because of one guy.
Well,
Yeah.
got a little overheated at the end. Starbucks, my Chaparral Trust owner. I just want to just go back for a second. Look, there's some good people on the Southwest
You're
board.
changing the subject already.
No, I didn't want to pick on one person. Ray Blunt.
Can't you just save it for later?
I didn't want to pick on one person. They've got like Brinker. See, they have Brinker doing this.
Hughes is about to go negative here.
I'm just saying they're as focused. They're not as airline-ish.
All right,
They're not as airline
Starbucks and
travel-ish.
Chipotle.
But now I just had to finish my thought. I didn't want someone to say, Jim just figured single out one person. I didn't want to be rude. Now let's go over Starbucks, because Starbucks is really important. Okay, there is a belief that the real problems with Starbucks are about mechanical stuff. And it's interesting because the thing that Luxman was supposed to be good at was the mechanical. And I find that this is a repudiation of a process and of a person that just didn't seem to click at all. And Carl, the first thing people would tell you on his side, and he did have a side, is that he donned the aprons. The first thing he did was get to know as many baristas as possible. But maybe that was the forest trees problem, because what really mattered was getting people in and out.
Got upgrades today for Starbucks out of Stiefel and Deutsche. Webbush actually ups Chipotle after that performance yesterday. A lot of snark about McKinsey. CEOs, Jim, yesterday.
Interesting.
Yeah, speaking of Narasimhan.
Yeah, there is a backlash, absolutely. And now, look, McKinsey, everyone knows someone just, look, you bring in McKinsey and do a good thing. Deloitte, these are places where they have a lot of smart minds. But yes, there was one in the Herd on the Street for the interview that I did with Luxman, that we did, it mentioned that he came back with McKinsey speak, which, David, I guess is like, I don't know, what does McKinsey speak mean to you?
I don't speak McKinsey speak.
You're illiterate in McKinsey speak?
I am illiterate.
You could learn it on Duolingo.
Yes,
do they have that?
Has it in the new Google
I'm
app.
sure they have an entire lexicon.
I haven't been to Meta AI yet.
Best practices,
best
right?
Practices.
Yeah, well, it's like it's.
What are your best practices?
It's sterile.
Are you
It's sterile.
a culture? What are you, a culture cleanser? No, a culture.
Look, I work 7 days a week. I don't know what the hell that guy who dropped out of Google's thinking. That's me.
Jim, you mentioned Brinker, where Chili's comps are up almost 15, but this guidance on the full year had them open. I think this is now would be the worst day since May of last year.
Yeah, I've got them on, and I want to spend some more time on that because they've really done a lot of things that are right. The stock has gotten very, very up. You say it's overheated. I think the numbers were fine. It's been the one that survived because they've got the under $11 meal, the smash burger, which is really fabulous. So I don't want to give up on them. I think that there's a lot that Hockman has done a fabulous job. I want to do more on this because
you should do work on it because it's down 15%. It's not like a 3% decline.
No, I'm going to just wing it.
No, but
I'm going to have them all just wing it.
You're
What
like
the hell?
treating
I
it
don't
like
need
it's
to do
nothing.
anything.
This thing's getting crushed right now.
No, I'm saying that maybe it's wrong that it's being crushed.
By the way, the guidance, the implied guidance on comps for the full year down 3 to 5. Street's down 3.
Yeah.
So it's not a wide.
Not.
It wouldn't be a wide miss.
No, and look, there's a lot of positive commentary about it, and I think that this is one where you should give him the benefit of the doubt. Hockman's done a fabulous job. Now, someone from former Brinker person's on the board of Southwest, David, if you really want to be arcane and obtuse, like the warden in Shawshank, if you want to be that way.
Obtuse,
but I think that Brinker...
Like the warden at Shawshank?
I'm going to listen to the conference call.
You should.
Damn. Because,
All right.
that's what I do, David.
I do know you do it. Typically, you've already done it.
Well, it hasn't happened. It's hard.
Oh, it hasn't happened. Okay.
But no, Carl, this is the
Now you have your AI bot do it for you, don't you?
How do you know that's not who you're speaking to right now? I don't want it. Sometimes a guy like Kevin Hockman has turned this thing around. So we got to spend some time before we throw him under the M104. That's a bust, just in case you know.
Thank you. Actually, I know that line pretty well. Right.
What, the M104?
Yeah, because it runs up Broadway.
I didn't know he ever.
Well,
I didn't know he.
but the backdrop remains the same, and that is they are going to have to adjust some pricing if they want to drive traffic.
Jeez, and they have the cheapest margarita in the country. They did switch. They have a lesser tequila, the largest serve of margies. But no, I mean, I found this hard because I know that they've got prices that were almost converged with McDonald's, and this is sit down. But we'll find out. I mean, if it was a price too far, he'll just say it. Kevin Hockman will just tell you, look, I didn't do this right. He's from the school of transparency. How about that?
As for the broader market, Jim, we mentioned this attempt to get back to the 50-day. Other thing is that September has not been a good month for the S&P the last 4 years.
No,
average returns down almost 3.
Yeah, you got to skedaddle September. If you do those, this sell in May is completely idiotic. But there's no Diddy. There's no, Ogden Diddy for September. E. Cummings, no E. Cummings Diddy.
I see. Yes.
And you've got a club meeting today, right? At
noon? I got a meeting at noon, and I'm actually going to give grades out to the companies based on their quarters and their conference call, and it's kind of like not great. It's kind of like when my father wouldn't let me have dinner because I got a B in 4th grade.
Really, you don't think the beat for the season, for the quarter, has been sufficient?
I think the combination of what some of these companies had to say on their calls and how they did was suboptimal. And I'm going to call them out. Why not? I mean, I had given a D to, in my first draft, I had given a D to Starbucks. But you know what? They now are an incomplete. I get a D. I give him a D.
You don't think it was overdone yesterday? That 21+%.
It was overdone. It was overdone
based on one guy and what he conceivably will accomplish, as many accolades as come in for him.
But you have to remember where the stock was before the complete cataclysm of quarters.
Yeah, the toilet.
You know, the stock was hanging in.
Right.
And I think that when you look at this man's reputation at Chipotle, where he came in, remember, people felt that Chipotle was like,
let's go back a little bit in the stock if we can, guys. Yeah.
What?
No, I wanted to look at more than a 1 week.
And I knew Brian Brian has been around for a while, and he has been in a lot of places. He's from that great coaching tree, that Yum coaching tree, which is pretty good.
Although others pointed out yesterday, the Chipotle turnaround was about a food safety fix. This is a lot more than that.
Well, I think that when if you go look at go on the last conference call, and this is just typical of their fantastic conference calls, there's a tremendous amount of time talking about taking 28 seconds off of a transaction, and how there was a Boston Chipotle that had taken 28 seconds off, and it was being hailed because you see the really good managers, when you have something incremental that's good, they hail those people. Because how much did it cost for Brian Niccol to single out that Boston Chipotle? How much did it cost?
Nothing.
Yeah, then why don't other CEOs think about pointing out people who do well in divisions that do well within large companies?
It's a great point, Jim. I
What's
agree
it
with
cost
you completely. Nothing.
Nothing. Bob Rubin once told me
boosts
that.
people up. Makes people happier.
Yeah, it does. Well, you know what? Morale is important.
Very important. They teach you that at McKinsey.
They do? Oh, I got.
They don't call it morale, though. They got some other name for it.
We didn't mention Victoria's Secret up 20%.
Well, that was
on this Hillary Super
that
CEO.
Seemed like a total hitter.
Former Anthropology, to your point.
Yes, and plus, that's just been. Those guys have not been great. So to get a real operator, it's a coup. That's a seasoned operator. Really terrific. And I don't think McKinsey did.
As we go to break, watch bonds. We got the big print out of the way for today as CPI came in a little tame. Not much else on the docket, but of course, retail sales tomorrow will be another barn burner. We'll check that out with the 10-year right around 383. Stay with us.
Okie dokie. What is on the doomers? What do they have? Let's listen to the doomers.
That everyone told us was going to happen in earnings hasn't necessarily happened, and it feels like just overall this has kind of been a mediocre reporting season. And I mean, you translate that into what we're seeing in the macroeconomic picture with expected Fed rate cuts beginning in September. I mean, what does that translate to going forward through the end of the year?
I mean, you're right that it's been mediocre relative to the last 2 quarters where you had bigger beats on average relative to expectations. But let's just keep in mind, earnings this quarter are still likely to grow 11% on 5% revenue growth. That's good. I mean, on average over time, I think we should be expecting more like 8 to 9% earnings growth out of the S&P 500. So again, not so bad. The composition is the bigger issue that we've already talked about. And again, that's where I get optimistic about the ability of the market to rally from here, is when you have more companies delivering better earnings growth, that should lead to a healthier market. It's really interesting, by the way, back to the 80% of the rally year to date from 20 stocks. If you look in European markets and other non-U.S. markets, it's a much healthier rally that we've seen. For example, looking in Europe, you've got banks, you've got tech, you've got healthcare. In the U.S., it's tech, right? Yeah. And so I'm looking forward to seeing that transition as we move toward year end, and I think that's a positive sign for the market in general. And I don't want to miss this, by the way. I do think people should look beyond the U.S. because the big sell-off in the last 2 weeks, Japan is the glaring sell-off. And a lot of the clients I talk to have been saying for the last year, every strategist is telling me own Japan, but when you ask them, well, do you own Japan? The answer is no. Well, if you've been waiting for your opportunity, now's a good time to do your homework on Japan as well.
Ron, great having you in. I'm going to try and get you back in here when we get the non-farm payrolls number.
I personally am like so anti owning unless I can be there. I'm the same way with real estate. Like, I'm willing to own if I can be there, and quickly too. So it's hard for me to go, oh yeah, I want to invest. Like, I was born in Germany, family in Germany. Do I invest in Germany? No, I'm not part of the market on a daily basis. So I think it's a lot harder to know, what are consumers into, what companies do well, which companies do poorly, which have the best reputation. What are the trends? So I always find it interesting when the suits are on TV going, oh, you should you should be doing your homework on China or Japan or emerging markets. It's like, okay, dude. Yeah, I'll go hop on a plane to Japan and go do some research for a few months and get back to you. Anyway, so, interesting, you got a little bit of a BTC warning here, right? I mean, Bitcoin warned us that it got rejected at 61.8 as the CPI data came out, and unfortunately, it's really just somewhat started falling off a cliff over here. People don't get it. I don't. People think I want the market to go down. I don't want the market to go down. You know how hard it is to like expand startups if the market is collapsing and you're in a recession? It's like everything just grinds to a halt and you just waste years of time. Like, it's bad. Like, my gosh. But yeah, so I just want to be clear, like, best freaking case scenario, man, just freaking moon style, like, whatever. Everybody gets happy then, and nobody loses their job. So, I think there's a real pain that comes with recessions that people have forgotten. There's this impression that, oh no, I'll be able to buy a house in a recession. I'll buy the dip like 08. I'm like, no, you won't, because in 08, the 08 version of you didn't have a job. The 08 version of you couldn't get a loan from a bank. The 08 version of you was begging for work at 50% off because nobody was hiring. The 08 version is like hell. So, Brian, I actually am exposed to gold ETFs as well. And I'm not a gold bug by any means, but, I have exposure to IAU, which is a gold ETF. I'm not pitching that. It's not a recommendation. I think gold's at like all-time highs right now. It's just because, you've got bond traders who are going, I think we're going to a recession. I'll tell you, if you want to know what I think is we talked about this, and we've been talking about this for a while and course member lives, and there's some plays that we specifically talk about, that don't so much, we don't have to get into all those details now, but I think if somebody had a bunch of cash right now, dude, the 30-year treasury bond, and this is not a recommendation, it's just an observation, that if we go into recession, the 30-year treasury bond prints. If we don't go into recession, it pays you a 4% yield for 30 years. And unless there's a second wave of inflation, I don't see yields going higher. Now, of course, the counter argument is, no, Kevin, we're going to have a second wave. Commodity Steve's going to spawn in. He's going to go, Kevin, buy gold, buy silver, and Dell, and stay away from what's it called? Some of the bonds, because the second wave of inflation will kill them, which is true. If there's a second wave of inflation, you get burned. So yeah, no, I mean there's some legitimate concerns, but no, am I gonna let FOMO take over? No. Wow, what a nasty barcode there on Upstart. That's gross. Meta usually does pretty well. It's not really doing anything right now. ARM, oh my gosh, ARM Holdings gave up they were up 5%, and they gave up all of it. Wow. The Qs are about to hit 460. Now, that's a pretty important line right there. 460, 460.58. Like, I'm really watching that line heavy right there. That's an important line to be watching. 460.58. So watch that. Let's see if you get a bounce over there. Pretty important. And right now, it looks like you're kind of just trending down, unfortunately, a little more towards that. Are you gonna bounce? You gonna get a bounce here? Come on, baby, light my fire. Obviously, this is just a 1-minute candlestick here. Ordinarily, to really justify a bounce, you've got to have traders like to say 2 to 5 minutes. So what I usually like to do is I just count the 1-minute candles out 2 to 5 minutes. It just gives me I feel like I get like a microscope on what's going on inside. Like when I'm on the 5-minute candle, I'm just like, what's going on the inside? I don't want to know. So I don't know, but some people say that can kind of skew outlook a little bit. I don't know, but it does look like you're trying to bounce right now, right there. Looks like Nvidia was up like what 2% in the pre's, and now you're sitting at 1.4 to the downside. Pretty aggressive flip-flop there, I have to say, especially after broadly good CPI. I'm not sure if it's profit taking or what. I mean, you got the SQQs that are positive. Palantir gave up 2%. Amazon gave up its rally. IWM is bleeding out. And I want to be so clear, not because I'm here to give you personalized advice or recommendations. I just want to be so clear. This is just an observation of history. If we go into recession, so understand that conditional, okay? If. So the if does not trigger unless it occurs. The if occurs, right? So what's in the if doesn't occur if this doesn't trigger. And I say that because sometimes people are like, oh my gosh, you just hate this. And I was like, no. If we go into recession, the last place you probably want your money is in small caps. These are generally deemed to be the most economically sensitive stocks that you could be exposed to. Mike Wilson makes that argument too, but then again, Mike Wilson's been wrong for a long time. So he missed out on the Nike swoosh. Even though I agree with him now, I didn't agree with him then. I was Nike swoosh, buy the dip. But now I'm kind of like, gosh, I think actually what Mike Wilson's talking about is starting to get a little closer to reality. I think he may have just been very early. Which is unfortunate for him. Same thing for Klonovic or whatever over at JP Morgan. He lost his job being the resident bear at JP Morgan. And, he might end up being right here. He was probably just a little on the early side. Well, you don't want to lose that 460 there on the Qs. My take, psychologically, you want those Qs above 460. But let's see what happens here. It seems like maybe you can get a little bit of a bounce in. Ubiquity's down about 8 bips. Nvidia's still holding down on 1.6 there. Meta just threw it on a red candle. Q's stuck there right now. ARM's trying to actually recover right now. It's interesting. Come on, Q's. Give us a direction. Are you going to hold it or not? Pick a direction, you weenie. I think that's probably one of the worst things of trading is just when you're waiting for you're in a consolidation or whatever. Not necessarily that this is one yet. I mean, it's been 4 minutes or whatever, but it's okay, which direction are we going to go? I got some trades to do here. We've got some work to do. So I'm out of coffee on my Transformers mug. That's okay. Lately, I've been getting in the habit of bringing 2 coffees, by the way. Yeah, and not personalized advice, but I think that's definitely a considered recession hedge there, NMCT. That makes sense. A lot of people have that view too. Okay, here we go. A little bit of a bounce there on the Qs. Bounce on Nvidia. Tesla, 3-minute bounce. Okay. Question now is, will it hold? Usually you need to get 5 minutes. Oh, giant red candle. Right the second after, I'm like, okay. That's always how it is. You ever get that feeling that you enter a trade and you're like, all right, it's going to the moon. The second you hit submit order, just a giant red candle. Or you buy puts, you're like, oh, it's going to hell. It's going to break down. The second you hit submit, giant green candle. It's like the trading gods are like, I will test your resolve.
Another inline benign CPI report on inflation. S&P is down 0.1%, but that is masking some strength in some of the sectors like energy, which is up almost 0.5%, and financials also having a good day. Consumer staples, industrials, real estate, and healthcare, they're all higher. Communication services and technology are lower, which is dragging down the overall index. The NASDAQ down 0.4% after what's been a pretty strong run this week, thanks in part to NVIDIA. One of its largest components, having a nice rebound week. As far as the Dow, it is higher, and that's because Home Depot is adding 27, United Health, Travelers, American Express, and Microsoft, all big gainers today. Take a look at Treasuries. We're seeing a mini rally with yields coming down a little bit. The 10-year 3.8%, the 2-year yield just below 4%. We're 30 minutes here into the trading session. Here are 3 big movers we're watching. Kellanova shares popping on news. Mars is buying the consumer food company for around $30 billion, $83.50 per share, biggest deal of the year so far. The CEOs of both of those companies will be joining us exclusively next hour on Money Movers. Alphabet also on the move today following reports that the DOJ is considering a bid to break up Google following a court ruling last week that found Google monopolized the online search market. We're going to talk about that one too. And then watch Brinker, the parent company of Chili's and Maggiano's, reporting an earnings miss and lower than expected profit outlook for the full year, despite a jump in fourth quarter sales from higher prices. The stock down more than 14%. Guys, the big news, though, in the world of macro in the markets is the CPI report. Always a lot of anticipation lately on these inflation numbers, but increasingly, and this is a good thing, they're coming in line and less dramatic. So we got 0.2% on the monthly increase. That was about as expected. And on the core, if you strip out food and energy, you also got 0.2% on the monthly increase. And actually, if you don't round it, you get an even lower number, which is good news for the Fed, good news for the market, helps the Fed cement the idea and feel more comfortable with the idea that they can cut rates starting in September. So where are we on the year-over-year numbers? Because we know the Fed targets 2%, right? And they look at PCE, which comes out later in the month. But we got down to 2.9% on the headline number. That's good. And then on core, we're at 3.2%. Where's the inflation still happening in the economy? Well, energy was flat. That was good. Food is still 0.2%. And it's higher if you're eating away from home at the restaurants than if you're eating at home at the grocery. Shelter is still a problem. That's that owner's equivalent rent, which because of the way they calculate it, it really does lag. So economists aren't that concerned about it. And transportation services also a contributor. And that's auto insurance, which saw another more than 1% jump on the month. But used cars down 2.3% on the month. Apparel continues to be deflationary. Medical care services came down a little bit. I would add airfares to that mix as well, which helped the overall transportation services. So all in all, guys, it's good news for the Fed and for the markets itching to cut rates, but it's not necessarily indicative of a 50 basis point cut, which some in the markets were getting excited about lately, or an intra-emergency cut because the Fed is so behind the curve. Because there are still areas, David, of the economy that are looking hot. So if there's disappointment around this number today, it comes from the fact that the market is just getting too aggressively priced for rate cuts. They're pricing in 100 basis points of cuts by the end of the year.
By the end of the year.
200 by next August.
Where are we on getting 50 in September? And I'm curious, if we do get 50, what you think the reaction will be in the bond market and the equity markets, but the bond market even more so.
The expectation now, so the market's not convinced of 50, and economists certainly aren't convinced of 50, and this report won't convince anyone at the Fed of 50. We'll get a labor. So now that what this does is it puts the onus more on the labor market data, and that's going to determine whether we get a 50 or if we get more rate cuts. Because if labor market now the bigger risk in the Fed's two-sided mandate, then that will determine it. So if we get a really weak jobs report in early September, maybe then the odds go up at 50, right? In the Fed mind, in investors' minds, because right now we're not quite there yet. And that's the takeaway of the data. Chris Rupke over at Forward Bond says the inflation outbreak is over, and therefore we need to overweight the jobs number, and they will get the August jobs number before the September meeting. So I think that'll be important in determining how big of a rate cut we get. We heard from Atlanta Fed President Raphael Bostic. He suggests that they're getting close. Remember, it was just July in the July meeting where they pivoted the language towards an easing bias. I mean, they were in a hiking bias before. He says it would be really bad if we started cutting rates and then had to turn around and raise them again, right? That would introduce all sorts of uncertainty. But it's coming. It's coming. If the economy evolves as I expect, you all have bigger smiles on your face by the end of the year, talking about the cuts. So they're warming to the idea, and I think a lot of people expect Chair Powell next week when he speaks at Jackson Hole to sound more confident. He was a little wishy-washy in July about the idea of cuts. Sound more confident that the cut is coming, but obviously not pre-commit, and certainly not pre-commit to a double, which is a 50.
Right.
because we just don't know yet. I mean, it's really going to depend on the retail sales will be important tomorrow, and jobs most important. And the only other shout out I wanted to give was, Treasury Secretary Janet Yellen, who before that was a Fed chair. We talked to her in December 2023 when inflation was still a really big problem and we were getting prints in the mid threes. Remember what she predicted? I just want to refresh your memory on this one.
When do you think the Fed will achieve its 2% inflation target? When does that happen?
Well, my expectation is that inflation will continue to come down, and I would frankly expect, I don't want to do a precise forecast here for you, but I think when we come to the end of 2024, 2 is certainly, likely to be the first numeral.
A lot of people weren't predicting that.
2, yeah, right.
9% read today on the CPI. So just wanted to give a little credit there on the forecast for inflation. It should be good news for the Biden administration if they can convince Americans that the cumulative impact of inflation isn't as dire right now, because that's the problem that's fighting against them on the political front, that people have just been feeling this for years and it's added up.
Well, we're running 1.6 on a 3-month annualized. So that is below target, although it's only 3 months. Let's turn to the market reaction today following the print. Joining us this morning is Ed Yardeni, of course, Yardeni Research President. Ed, great to have you again. Good to see you.
These guys, they're pretty bullish, by the way. Yardeni, they are very bullish. They're like, this is not a recession. What do you mean recession? There's no recession. Let's see what he says.
Absolutely. I've been predicting since the summer of 2022 that we get to 2 to 3% by the end of last year and early this year, and we're basically there, and we think that we'll get to 2% by the end of the year. If you take out shelter from the CPI, you're basically there.
Oh, he means inflation. Oh, okay.
Are we there yet? We're there if you take out shelter. We're at.
Oh, I thought, did Yellen mean inflation or did she mean rates? Maybe she meant inflation. That's okay.
Are you suggesting that? Then I think shelter is what, 90% of the increase this month?
I believe so. Yeah.
Yeah. I mean, do you expect the follow-on effect to accelerate, or is this going to be a continued?
Oh, we're going back for another test here, folks. Look, watch that QQQ right there. Going back for another test right now.
Kind of a laggard. It's catching up with current rents, because it includes not only current rents but also outstanding rents. But I think time is actually on our side in terms of getting faster decreases in rent.
The other note of yours, Ed, that got my attention this week was yesterday when you talked about what's happening in Kursk with Ukraine, and the notion that if Putin is really pressed, his reaction might be, I think the word you used was unsettling.
Looks okay right now. It's bouncing again right on that line. We'll watch it. If we break that line, it's bearish on the day.
Main concern.
It might take.
Concerned at all about the economy, and I still think it's resilient. By the way, I think that the next employment number is going to be a strong one, because I think the last one was weather affected. Inflation's not concerned because it's going the way we thought it would go. So at this point, between what's going on between Russia and Ukraine and the tensions and conflicts in the Middle East, there's a lot of geopolitical risk. The price of oil on Monday was up like 3% on all this war talk about the Iranians about to attack Israel. And then yesterday, I think a lot of yesterday's rally was because the Iranians said, if the Israelis and the and Hamas work out a ceasefire, then they won't attack Israel. So it's on and off here in terms of the geopolitics impact on the market.
I do wonder, Ed, though, if we're in a place, and I talked about some of the more aggressive pricing for Fed cuts, where this benign inflation data isn't as soothing to the market as it once would be, because the market is expecting more cuts, and you would really have to just see a deterioration in the economy to justify those cuts, which is not ultimately good for equities.
Yeah, I've been opposed to a rate cut, but I'm a reasonable person. And, if the Fed signals that they're going to cut no matter what I think, then that's what's going to happen. But I think it's a quarter point, and I think it's one and done for the year. I don't buy this 50, 100 basis point cuts in the Fed funds rate.
Yeah, odds of an intermediate cut obviously plummeting here, even after the panic of last week.
That would have been a disaster. That would have been a disaster because it would have worsened the carry trade unwind.
Yeah, you pointed that out in the midst of all the action last week.
That's right. I mentioned that as well, that like if you cut in the U.S., you lower the value of the dollar and you actually add fuel to the fire.
We head to a quick break here. Let's give you a roadmap for the rest of the hour. What this morning's inflation print means for stocks, the Fed, and rates. We're going to have former Fed Vice Chair Alan Blinder with us, and we'll certainly go over those numbers with him.
Plus, deal of the day and biggest of the year so far. Mars buying Kellanova. Biggest M&A deal of the year. We're going to go into details this hour.
And the DOJ reportedly weighing this breakup of Google. We're going to talk to one former FTC commissioner about the potential road ahead as this big show continues. Squawk on the Streets back after this break.
Yeah, whatever. All right, so what do we got? We got IWM's down, Nvidia, Tesla. Okay, what else is going on here? Looks like you're getting a little bit of a bouncy doodla here. A little bit of a bouncy doodla over here. You did break on the Qs though. Wow, look at that. Not terribly much of a bounce-la. So, okay. And then, looks like, big question mark now is just going to be what direction does the market go the rest of the day. Looks like Tesla, I don't know what it's trying to do. It's down, it might be trying to bounce off close to 200. 200 seems to be certainly I don't have a line drawn for 200, but honestly, I may as well, because 200 seems to be a spot where it frequently either, I mean, we'll see. Let's see if it bounces there today. I usually don't like drawing lines willy-nilly. But you know what I'll do is I'll draw a trash line. So we have decided lately to use World of Warcraft coloring for the lines. So the one you're least confident in gets gray. It's not true yet for all the lines, but there we go. It's got the trash color. Yeah, okay, what else here? I'm actually surprised. The Qs really gave this up. BTC, man, back to its warning sign, eh? Look at that. And the Bitcoin warning is still blaring here. I mean, as soon as we got rejected off 61.7, bounced for a bit there at 60,700, right? And now we're in no man's land heading down to 57,580 over there. And honestly, I mean, I don't know. I thought today was going to be a green day after that CPI report. I mean, like, I'm like, oh, okay, probably going to go green. But, you know, the trend is, I mean, here, now you're getting a little bit of a bounce here, but, wow, weird. Just a weird little sell-off there. So it's unclear, is it like profit taking or what's going on there? I don't know, but we'll watch what's going on. So Meta, that's not really going anywhere right now. You've got, what else do you have here? ARM's trying to recover. It was up like 5% for a moment. Palantir's up 163. So Palantir decided to try to go running again. I like going running. Anybody else run? Anybody a runner? All right, let's listen to what they're talking about with CNBC over here.
Three best performers in that Mag 7 mega cap trade. It has been Nvidia up about...
Oh, somebody says sell the news because retail is going to be recessionary. Yeah. You know, remember, strong, like a benign CPI report also signals less pricing power for companies. And so sometimes people like write down earnings after reports like this. Good CPI equals earnings fears. Yeah, exactly. Yeah. There you go. That's right. BTC Omen. Yeah. Very interesting. QQQ stop loss hunting. Maybe. Lost the lead. Yeah, there you go.
Lost the lead.
Okay. It's all bearish, says Richie later. Yeah. I like it when you run into your short. I like it when you run in your short shorts. What? When do I ever wear short shorts? Oh shit.
The bigger NASDAQ and S&P 500 as well. So keep an eye on chips. I'll send things back over to you.
All right, Dom, thank you. Dom Chu back at HQ. Speaking of tech names that we're keeping an eye on, Cisco is going to report its earnings. That'll be after the bell today. And tomorrow morning, Chuck Robbins is going to join us right here, 9 a.m. hour. Break down, of course, the numbers from the company. Also some reports of potential layoffs, so we'll have to wait and see what we get there. Another stock we're keeping an eye on this morning, Southwest. Activist investor Elliott Management announced plans to launch a proxy fight there. It's something it rarely does. It nominated as many as 10 directors for the company's 15-person board. Phil LeBeau, of course, follows this company along with all of the airlines, and I want to bring him in now. Phil, they own 11% of the company. We've known about their presence for some time. Do we have a sense as to what Elliott wants if, in fact, it does gain a majority on the board that the company is currently not doing?
Well, they want them to move faster, at a minimum, David. And you will hear Southwest, and I've talked with executives at Southwest who have said, look, we've announced a number of changes that are going to be kicking in over the next year, year and a half, including assigned seating as well as flights and premium seating, which is going to be the big revenue driver. Those are just three, and we're going to hear about more in late September. Elliott's response is, you got to do more and you got to do it faster. And by the way, you are correct, David. When you add in derivatives, they've got about an 11% stake in Southwest. Officially, just 8.2% of the shares. Once they get over 10%, they can then call for a shareholder meeting, which is when we would see the proxy fight play out in terms of how many directors potentially could be elected to the board. There are 15 seats overall. Southwest also points out that it has been adding more independent directors to Southwest, something that I think Elliott scoffs at. Elliott thinks that they're not, that it's basically a lot of people who have been in place for a long time and that Southwest is not moving fast enough. So, David, this is going to play out over the next couple of months, whether or not we actually get to a shareholder meeting and a proxy vote, or if we see Southwest add even more changes even quicker that could perhaps stave that off. It is worth noting that Southwest has said, and I've talked with Bob Jordan, he has said, look, we have tried to engage Elliott in conversation. We are willing to work with Elliott. Elliott has been a no-go in terms of any type of discussion. So let's see how this plays out.
Well, yeah, and Southwest said that in part of their statement. Elliott wants him out, right? I mean, they want a clean house,
Yes.
It would seem, in terms of the executive team there.
Oh, they've said from the beginning, Bob Jordan's got to go. Gary Kelly, the executive chairman, former CEO, both have to go. In the eyes of Elliott, those two guys have been at Southwest for so long that they're not moving the company in the right direction quick enough. Bob Jordan, when I've talked with him, and we've had him on the air, he has countered by saying, look, we have had a number of issues that have set us back, including fewer airplanes from Boeing, which definitely has had an impact over the last year and a half, and other issues, some of them brought on by themselves, and that they are moving in the right direction. But again, getting back to my original point, what you talked about last hour with Jim, David, it's, are they moving fast enough? Will Elliott say, okay, you're adding some changes here. Are you moving fast enough? Or do you have enough institutional investors who say, you know what, if there's a proxy fight and there's a proxy vote, maybe we get a couple more outsiders on the board.
Okay, Phil, we'll continue to watch that drama unfold. Phil LeBeau on Southwest. When we come back, the details behind the biggest deal of the year so far announced today.
Yeah, I really hate Southwest's unassigned seating crap. I always just absolutely despise that. I think it's gross, especially with families. I mean, if you're solo, maybe it doesn't matter, So, but anyway, you got a little bit of a bounce here on Bitcoin. I'm generally a very big fan of watching Bitcoin and seeing the move of Bitcoin, watching as a tool for what it might signal going forward. So I do like that. It does look to me like you've got a little bit of a BTC bounce here. The question now is, will that hold? You had a little bit of a bounce there on the Qs, Tesla, Nvidia. Everything seems to be trying to recover a little bit here. Let's see if it can hold. IWM kind of still bleeding on the day, but you can see that the pace of decline has substantially slowed. So you're probably going more towards consolidation for the rest of the day. And, I mean, no guarantees. I mean, nobody knows, right? But Amazon gave up its lead here going into retail sales tomorrow. Palantir is holding on over that 30 level pretty good. Starbucks down like 4% today. Wow. Chipotle's flat. Apple's up 11 basis points. Not a lot of moving here. TLT's going up. Yeah, Tesla bobbing around here. Doesn't really know what it wants to do. But yeah, watch the Qs. Watch BTC. Ugh. So, anyway. So, yeah, there we go. Appreciate y'all being here. I guess I'm going to go ahead and push the button. Wish y'all the best. Do you assign seats in your jet? No. No, you can sit wherever you want. All right, here we go. Which, by the way, we got I think our first Mastermind is coming up, so make sure to check that out if you want. Go to meetkevin.com/mastermind to learn more about that. It's a little bit on the higher ticket side, but it's pretty fun. And then we should have some options later this year as well, some dates for shadowing if you want to come see some of the real estate. You can always email us if you have questions at staff@meetkevin.com. All right, here we go. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. There you have it. See you all in the next one.